You're watching Famous Dave on YouTube.
All right,
You're
folks.
watching Famous Dave.
See if I can stop my intro from playing for a second. Welcome back to the program. Thanks, everybody, for tuning in. I just want to go through a couple things this morning before the open. I know it's been really chaotic out there, and I hope everybody's doing all right with their positions and stuff. First thing I wanted to cover is just talking for a second about the possibility of these ETFs being terminated, because I've gotten a lot of questions lately about could TQQQ be terminated. The questions usually go something like this: could blah 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 be terminated like XIV? Could Gush be terminated like XIV? Could TQQQ be terminated like XIV? And I am not a super expert on oil products, so I'm going to stay away from those. But let's talk about like the equity products here, like the TQQQs. TQQQs is a leveraged equity product. I believe 3 times leveraged equity product of the triple Qs, T standing for triple. And when we talk about the VIX term structure, the unique thing about the VIX term structure is that there is no arbitrage to between the cash and the term structure. And what that means is just simply that the futures can bounce around. If you want to translate from futures into something that's comparable, probably the easiest thing to do would be to buy or sell some options in the SPX, because that is what the VIX is based on. But the futures kind of freely flow, and thus the way ETFs work is they have to rebalance at the end of the day. And in the case of XIV, they needed to buy a number of futures between 4 and 415, as was part of their formula. And there are not a whole lot of people in the world who make markets in VIX futures. Compared to the TQQQs or the NASDAQ, where there's a lot more people trading NASDAQ than the VIX futures. Also, my point about there not being an arbitrage, if you are somebody who wants to sell NASDAQ futures to somebody, let's say, somebody comes and says, I want to buy 100 NASDAQ futures, and you're making markets in them, and you sell them 100 futures, and then someone turns around and says, we want to buy 5,000 more. If there's no simple arbitrage like in the VIX, then you are kind of just up a creek and you just have to fade away. And your response would be to fade. By that, I mean you raise the price rapidly and until you see sellers come in. So price discovery would be your only option. With something like the TQQQ, there is an arbitrage that's fairly simple between the TQQQ's futures and the cash, and that would be to just go out and buy the actual stocks that compose of the TQQQ. So, for example, at the end of the day, if they need to rebalance the TQQQ, they can go out there, and if you sell too many futures, as a market maker in the futures, you can just turn around and go and buy some of the actual stocks, right, to protect yourself. And you don't even necessarily need to buy the whole index in its exact proportions. You could just go and buy, a ton of Apple or something like that, and to hedge yourself to some extent. There's no sort of way to hedge yourself in the VIX that way. And this is what created a very unique situation in the XIV that allowed it to terminate. And the other thing I think people were thinking of is just a termination event, which would be where we went down so much in one day that the TQQQs just went to zero. Now, if you have a 3 times leveraged fund, then all it takes is to go down a third, and you by multiplying that by 3, you're at 0. So for a TQQQ to go to 0, because remember, these products can't go below 0. So if it gets to 0, what do? They just close it out, cash it out, and everybody just loses their money, and that's it, because these things can't go below 0. The products that they are using to maintain that 3 times leverage would allow for this product to go below 0 if it wasn't for these controls that are put in effect. So the risk to the downside in a TQQQ of it terminating was that it goes to 0. And this actually, the fact that it would terminate at 0 is a protection for you as somebody who is who is using this as a trading vehicle, because it protects you from your account going negative. They're treating it like a regular stock, where like if it goes to 0, that is all of your liability. You're not liable below 0, and so so they will terminate it if it gets to that point. It protects the company that's running TQQQ, and B, it protects you from owing money to somebody in a brokerage firm type situation. So what would happen is, if it, for some reason, it actually could go down 33%, which it pretty much can't, and I'll explain that in a second, what would happen was they would terminate, and then whatever small fraction of money was left, they would possibly distribute as a one-time sort of special dividend to shareholders. But it's very unlikely that TQQQ could terminate, because as we have found out in the last day or two, there are these circuit breakers in place, and the circuit breakers are towards the S&P 500. However, we know that S&P 500 down 20% and things close for the day, at which point the TQQQ would reset for the next day. So you would need a situation where the NASDAQ somehow was able to get down 33% before the S&P got down 20% overall in the day for it to go to 0, which is highly, highly unlikely. So I wouldn't worry about termination events in these products. I do think, though, that this period we've been in of exceptional volatility does highlight the fact that using leverage products is very risky. You lose enough money just being long the SPY or being long the NASDAQ than having a triple leveraged long product on. That seems foolish to me, to be using leverage in a situation where you don't know what's going to happen directionally. So I hope that clears that up a little bit. The other thing that really has been bugging me when I look at these chat rooms and whatnot lately is just people treating the VIX as if it's just, and VIX products as if it's just another stock. Somebody will ring off a list of stocks, and they'll show their technical analysis charts towards them, and in the middle of that, numbers 16 and 17 in that list will be the VIX, and like VXX or something, and they'll just treat them like they're other stocks. And like when people talk about the VIX and say, well, okay, well, it got to 40 last week, it got to 50 this week, it got to 60, now it's going to go to 100. It doesn't work that way with the VIX. Volatility, and I can illustrate it with my hands, volatility is how much stuff's moving around. So if you've got a situation where volatility, and I know it can be confusing because volatility is expressed in option prices, so you see it as a number next to options, but it really is how much stuff is moving around. And it gets harder and harder to move higher. It's not like Apple or something where, like, yes, it gets to 200 and then next up 300, next up 400. The higher the VIX gets, the harder it is to maintain that level of motion, of drama, and I know it hasn't kind of seemed that way lately because we've seen it continue to spike higher, but it becomes harder and harder and harder to maintain an elevated state as we get higher. And so it's not like, okay, well, we attained 60 this week, next week 100, next week 1,000. And I really caution you to get out of that mentality of this is just like other stocks that, it's slowly moving higher or something like that, because the VIX is an oscillating thing, and it goes up and it comes down, it goes up, it comes down, and it is at a very extreme right now, and it will not stay at that extreme. It's people have this kind of notion that like reality is going to change, and all of a sudden, the new normal is going to be the VIX 60 or something, and that would mean that we were moving, 3,000 points in the Dow a day or something. I mean, it's just not sustainable. Traders get worn out from buying and selling and moving this stuff around like crazy all the time. So kind of try to keep that stuff in mind. Let's keep perspective. Several people have called the top in volatility over and over again, and it hasn't turned out to be true. However, the more extreme we get, the less likely and harder it is to move higher. And I really want to impress that on you. So just because you've gotten run over on being short stuff at lower levels doesn't mean that as we move higher, it doesn't make more and more sense that to be short some of this stuff. I hope that helps a little bit. And let's take a little recoup. The other thing I wanted to say is just that, this channel, among others, has discussed the strategy of what we call the bullseye strategy of selling a small amount of naked calls at the money strike as a viable strategy. And I just wanted to acknowledge that strategy, and when I've done it, I've tried to explain to people that selling one call should be considered the same as shorting 100 shares of whatever the underlying is, and that you should reasonably expect that you need to consider what would happen if you had a 100 or 200% up move. And that has actually come to fruition, and even we've had like a 300% up move in TVIX, and thus this stuff is real. If you had employed the bullseye strategy, you would have gotten crushed recently. And I just wanted to acknowledge that, the odds were kind of against it, but it has happened. And if you've lost money, losing money should be a lesson for anybody as a trader. We don't learn anything when we make money, but we should try and learn something when we lose money. And, I've said a couple times lately that I'm grateful for that Volmageddon, because it taught me to have to limit my risk and be more careful. And if it hadn't been for the Volmageddon, then I might have blown out my account in this situation that we are in right now. So grateful for that. I'm grateful that I have all these people who've checked out the channel, and I hope you've learned something from all this stuff that I've been talking about recently. So let's take a look at the numbers real quick, and I'll let you get on with your day. So as we move to VIX Central, now this is another point I just want to make before I leave you here for the day, is that we are still in a backwardation situation, and this is very important to recognize that we're in backwardation, because hold on one second. Let me see if I can get my screens going here. Display. Here we go. We are in backwardation right now to the tune of 19%, and this is very important to watch, because what that means is that these products are going to continue to move higher until we have some sort of resolution to this VIX being so high. So you need to be extremely careful, because we are getting closer and closer to expiration, and these futures are getting pulled higher, and thus VXX and TVIX will be pulled higher if the situation remains the same, until we get some sort of resolution to the point where the cash VIX can move below the futures. So Stuff's turned upside down right now. And so even if the VIX comes in a little bit, this stuff is, all things being equal, being pulled higher. So you want to keep that in mind. And until this term structure can right itself, I would be very careful about your decisions, especially as far as days till expiration, if you're going to short this stuff, because there is pressure to pull this stuff higher. This 19% backwardation is per month. It's not per year. Usually when we look at percent terms, we think in our mind per year. This is per month, and so this is very significant here. And until we get some sort of resolution, as I said, to this sell-off, I would be very careful about timing shorts. I would move way out in time if you're going to be short, and I'd be very careful, because this backwardation stuff is real, and we could stay in this elevated state for a while. I put up the chart in 2011 when we were in backwardation for a period of months, and it just pulled this stuff higher. Now, ultimately, it did move lower, but I would caution you about this particular situation. All right. Thanks for watching. Let's see. Saluti d'Italia. I'm going to have some interviews coming up next week. Hoping to have some special guests on the show. I've reached out to several people. I hope some of them come through, and I hope you've survived up till now. The end result of this is going to be a good environment for trading moving forward, because the term structure has been moved way up, and that's going to result in a very fruitful opportunity at some point. We just don't know when that opportunity is going to be. But there you have it. Thanks for watching, and we will see you next time on the Short Vol Show Live. Please leave any of your questions or comments in the comments below, and I will try to get to them as soon as possible. Thanks for watching.
You're watching Famous Days.